Welcome to Financial Reaction, the place where beginners level up fast. If you're curious about dividends, covered calls, or how to start building real income from the stock market, you're in the right spot. We break everything down with energy, clarity, and zero jargon. This is pure information and education, never financial advice. Let's fire it up and get into it. Hey, in this video, we're taking a look at the weekly payers in our $10,000 challenge. We're going to start with the rec shares and then go to Roundhill, YieldMax groups 1 and 2, Defiance, and Granite shares. We're going to go through these quick so we don't take all day. If you've been following along, this is kind of just for information only, so you can see what would happen if you had bought $10,000 worth of these weekly dividend-paying ETFs. As you can see on this one, the big winner is CWII. So let's take a closer look at what we're at. You can see this is a 50% return on cost, so 45% yield. And that is 29% up with dividend reinvestment and share increase. As you can see, we started with an average cost of $10.86 and it's up to $14.04. And don't forget, this is the yearly return, and we've been doing this since March, and this is mid to late May 18th. So you can see that's obviously not going to be your 50% return. So let's see, weekly it's going to pay 12 cents. Today has been a down day in the markets overall. If you've been following along, today we are down 70 cents alone on this one. The other winners are MSII, which is also down. It only pays a 5-cent dividend. That was the most recent dividend. And NVII is paid at 24 cents on its most recent. Something I wanted to show you about compounding. And remember, compounding is what dividends are all about. So if you took this CWII and you started with, we'll just round it to 1,000 shares, and you reinvested your 12 cent, and that was an average return. It's not exact, but what would happen over time? So what I did was I just asked the Google machine, and you can do this too. If you had 1,000 shares, after 1 year, you would have approximately 1,559.42 shares. And that is initial 1,000 shares. Like I said, that's 12 cents return per week, and you reinvested it. If you want the math, there's a quick math. So you would have got 559.42 new shares after 1 year. That's obviously the price and everything's staying the same. So this is just generic numbers. And then I also did years 2 through 10. So if you look at this, at year 10, you would have 82,519 shares. And I ran the calculations on that, and that's about $9,900 a week at 12 cents. So if you see what you do is if you just started with $10,000 and then you would have $9,900 a week the rest of your life, that's not bad. That's obviously everything staying the same. So that's just fun math for dividends if you haven't done it before. If you're interested in dividends, I recommend playing around. Google's a great thing. You just type use the Google AI or whatever your favorite AI is, Chat, GBT or whatever, and you could ask different things. And if you don't have your own dividend portfolio, obviously you can follow along here. If you have any questions, put them in the comments. And if you have any different weekly paying ETFs, I'd like to know. So let's go to Roundhill. Roundhill is up 10,000 on the total portfolio. And it looks like our biggest return is ARMW. Why? Because the prices went from $26.98 to $45.57. The yield and current dividend, do we have why is that such a big number? 43. Let's see. Has it been paying a lot better and it's jumping around? Oh, I see. It had some that paid 15 cents, 16 cents. So this one is really sporadic. And then we had $1.14 a couple weeks ago, 50, 40. So this one is all over the board. But recently we have had some good numbers. So that's why that number is a little higher on the yield. It's up 68% total overall. Let's see. Let's pick is there anyone that is a little more stable? We'll go towards the middle. This one's from 35 to 39. Let's look at week. It's from 100 to 100. That's only up 2 cents. It's up $1.51. It's only a 3% yield. So when you see that yield, as you can see, it only pays 7 cents. So some of these don't pay as much in dividends. We'll take one middle of the road, and that's 44 cents, but it's dropped $1.30 today. So some of these, obviously, if you're getting 44 cents a week, but you lose $1 on the share price, you're losing ground. So over time, you'll have to just see how that plays out. Let's see. Let's go back to the next one, YieldMax Group 1. If you're familiar with the YieldMax, remember these went from monthly to weeklies this year. So that was kind of chippy. 196 shares, and I'll bet that's 0.002. The reason it's a whole number is because it's less than 1 on the fractional part. So dividend, it's paid 66 cents, 40% return. And this one has been going up, as you can see. As the price has gone up, so has the dividends. Remember, that price has done a huge jump from 55 to 71. So we're up 28% overall. GPTY is a 15%, but we're getting a 40% dividend. LGFY is only up a little bit from 21.22 to 22.73. It's a 7% total return, and the dividend rate is 89%. So some of those aren't bad. And then here's the big group. As you can see, the YieldMax Group 2 has a lot of losers in it. It's $33,000 down for the entire portfolio. As you can see, there's a lot in this one. This is the largest group of stocks offered in the weeklies. And you can see a lot of these are not doing super, but let's see what the winners are. AMDY is up from 31.49 to 49.35. It's got 100% yield on cost, and current yield is 66. It is up 56%, and most of that is the share price increase. Let's take a look at its dividend. It paid $1.09, and you can see its current yield is much lower than the 3-year average. And is $1.09 high? I'm going to say yes. And look at that. Yes, it is very. It went from 33 cents in April to $1.09 now. And it could easily go back down to that. Don't forget, this has an incredible run in share price, and that is because of the underlying. And that share price can go down if the underlying drops. So you got to remember, on all these, you got to look at not only the actual stock, but the underlying. Here's your breakdown. That's the up to 19,000, 13,000. This is your just quick breakdown. As you can see, this spiral that you probably can't tell if you're looking at this on a phone, you can't see the different colors. That's just your percentage or breakdown in the portfolio overall. Marrow 571 and it's at 615. It's down 16 cents today, but this is an inexpensive one. So if you're going to play with one, something like this is okay. You're going to get a 13% return on a $6 stock. Let's take a look at the dividends. 13 cents is okay. So it's actually not bad. If you see in the past, it was up in the 20s. Then it had a dip when the stock price went down, and now it's kind of creeping back up to 13 again. So this one has not had terrible swings in the dividend price. I do own this one myself. I have a few shares just so I could follow it in a real world account, not the dividend tracker. So, and I'm not recommending it for you. I'm just saying I own it, so you know that. NVIDIA is up 5.5%, 4.92 on Apple, TSMY. Some of these have had good losses today. See, one's down 47 cents. Misty is down. Look, wow, look at Misty, down $1.45. Misty has always been a highly volatile one, even when it was monthly. That was like the champion one when they were doing monthly pairs, and then they did that reverse split because it lost so much money at the end there before they went weekly. So if you had bought that during the monthly section, you really got hosed on that. I think it was a 1 to 10 reverse split. It was something powerful. It was not good. And that's something you got to watch out for these when the price just absolutely tanks. Let's hit Defiance real quick. It's up a hair. Down, well, it's down $1,000 today, so it's had a rough day. These are more consistent. As you can see, the cost to dividend, this one is 17% return, and it's a 65%, so that's a good one to look at. It's under a $10 thing. It's up 9 cents today. Hey, that's good. 8-cent dividend. That's where your 67% comes from. And wow, that one's really consistent. 5 to 8. So I like that. That's also one that's sometimes if you don't need to get the 100% return, if you could find stability. And don't forget, this is oil. And we all know what oil's doing. So right now, oil's high. But if it tanked in a hurry, some of these could suffer. But some of these are also doing real well. If you've seen the news, a lot of the energy companies are doing amazing right now because of the high gas prices. But that's obviously going to change when people stop driving because they can't afford gas. QQQ, that's the NASDAQ 100. It's up a little bit, 23.87 from 21.77. 30%. So a lot of these are in the 30 to 40% return. Like this one, even it's a 70% return, but look, you've lost more than that in share price. Don't forget, this is an annual number and this is just your current number. So that's why these numbers are so different. It says it's only lost 5.47% total. So that one actually is close enough. If the share price stabilized, you would actually start going into the green on that one. And then Granite shares, so this is the bad one, 39,000 for the overall portfolio. We have a couple that if you would put $10,000 in, you haven't lost your original principal, but with dividend reinvestment, you would be in the negative. This one is actually back to break even. It's what did it pay? It pays $13 a year. So this has a high return, and it's actually the only one that the stock price is up on, or the underlying. So that's, yeah, well, I've talked about this one. This one has not done well overall because look at some of these major losses. So yeah, unless you have a reason to look at these, if you think something's going to happen long term, but until they figure out their NAV erosion problem, I'm staying away from this group. Okay, that's the weeklies. I also did the monthly quarterlies in another video. And I'm doing, if you've been following, I'm doing covered calls in the TD Ameritrade Thinkorswim platform. I'm going to start that this week. I've showed you basics on how to do covered calls, and then I've reset it. So I'm going to start with a $100,000 portfolio, and I'm going to do covered calls. I'm going to try and get as close to the 100,000 as possible, spending all of it on buying stocks and then writing covered calls. And then we're going to take those covered calls and we are going to buy stocks and funds that are actually in this portfolio. I'll create a new one and we'll track how that goes. If that sounds interesting, go ahead and let me know what you think about that. Or if there's a stock you want me to trade covered calls on, go ahead and let me know on that. I'm going to go ahead and wrap it up here. So I thank you for joining me today, and these weeklies have been exciting, up and down, and let's keep going, and I'll see you in the next video. Thank you for staying to the end. If you haven't yet, please give me a like and subscribe. It means the world to me and helps me make more videos. Thank you so much. Goodbye.